signs for next moves. We can determine the central bank's following possible decisions with the varied data we will have this week. US consumer confidence and durable goods orders, Eurozone inflation, and PMIs from the US, UK, China, and Europe make it essential this week, while with the better than expected Markit PMI numbers last week, fear of recession returns. Let's review the most important events and data in the week ahead with me, Ahura, and FC Markets. Number 1. US durable goods orders. After a sharp rise in December, we expect a decline in January's orders. 5.6% growth in December was primarily thanks to a 17% rise in the transportation equipment category. Therefore, since we have a fewer aircraft orders, overall durable goods orders should reduce by 4% in January. However, excluding transportation, we expect durable goods orders to rise a modest 0.2%. Recently published industrial production figures imply the demand for capital expenditures has dropped and lowering the new orders. The US dollar should have an adverse reaction to these expected data. Number 2. US consumer confidence. Overall data says that US economic conditions are still stable and encouraging. As one of the leading indexes, consumer confidence will explain economy's general situation and outlook. For the US, and in February, is expected to rise to 108 from 107.1 in January, leaving the index just short of the one-year high of 109 in December. Also, the present situation index is expected to ease to 150.8 from 150.9. With these estimated data, pressures on the stock market should remain. Number 3. Canada GDP. Bank of Canada stopped or at least paused the rate hike cycle for now, while inflation eased in recent months. Therefore, it's time to wait and see the impact of made decisions. However, despite the recent declines, inflation is still high, and regardless of 1.6% GDP rise in the quarter for 2022, the growth trend may begin to downshift in the first quarter. For now, and with these estimated data, Canadian loonie can benefit from them. Number 4. China PMI. As experienced in other economies, the service sector is supposed to improve better than manufacturing sector after a long time of quarantine. Positive results of Chinese reopening should be reflected in the February PMI numbers, as both manufacturing and non-manufacturing PMIs moved back into expansionary territory in January after spending the whole of quarter 4 2022 in contraction territory. Expected positive data should help the Shanghai stock markets annually. Number 5. Eurozone inflation. As reducing global energy prices and improvement in the supply chains ease the inflation in the UK, we expect to see the same reaction in the Eurozone as well. Still, it would be a short-lived decrease as we saw in the US, and in the following months should rise again or stay stable at the current high levels. Therefore, we do not expect ECB to end its rate hike cycle, which means more pressure on the EU stock markets. And finally, number 6, ISM manufacturing and service PMIs. Recently published numbers show that retail and wholesale trade, transportation, construction, and factory orders have slowed down. Therefore, we expect the service PMIs to have weakening signs despite being above the 50 level. On the other hand, manufacturing PMI should still rise, but under the expansionary territory. Estimated data would not be welcomed on Wall Street. Thanks for watching this video and hope it's going to be an amazing week for all of you guys.